Welcome to the deep dive. This week, we're taking a look at the Indian and global markets. We're using the weekly flash report dated May 16th, 2025, as our guide. Think of it as, well, getting you up to speed on what really mattered financially this past week.
Exactly. We've got a lot to work with here. Benchmark indices, debt markets, Forex, commodities, those crucial macro
Yeah.
indicators, both from India and internationally. Plus, the key news headlines that shape things.
Okay, so looking at the big picture, it felt pretty positive overall, didn't it? Especially for Indian stocks. Seems like we had a bit of a boost from foreign investors coming back in, maybe geopolitical tensions easing a bit, and some better news on inflation.
Yeah, and globally, things were looking up too, largely driven by sort of easing trade war worries.
Right. So our mission here is to sift through all this data, pull out the key insights, and give you a clear picture of what's going on and, well, what it might mean. So where should we jump in first?
Let's kick things off with the Indian equity benchmarks, the main indices. That's usually a good starting point.
Absolutely. So the BSE, Sensex, and the Nifty 50, our main guides, both had a pretty strong week. Sensex climbed, what, 3.62%? And year to date, it's sitting at a decent 5.36% gain.
And the Nifty 50 did even slightly better, up 4.21% for the week and 5.82% since the start of the year. So definitely positive there.
Yeah, seems like a clear win for the large caps.
It was. But, here's where it gets interesting, maybe a bit more complex for you watching the market. If you look at the broader market, the BSE small cap and mid cap indices, they saw like huge weekly jumps. 9.21% for small cap, 6.87% for mid cap. Really significant.
Wow, that's quite a surge.
It is. And this is the catch to look at their year-to-date numbers. They're still down. Small cap is off by about 7.5%, mid cap down just over 3%.
Huh. So a massive rally this week, but still digging out of a hole from earlier in the year. That's quite a contrast.
Exactly. Really makes you ask, is this a real shift, a turning point, or just a temporary bounce back?
Yeah, good question. Is that enthusiasm for the smaller companies stick around? What about sectors? Any standouts there?
Oh, definitely. The leaders this week were pretty clear. BSE Realty was up a huge 10.66%. Then you had BSE Capital Goods up 9.64%, and BSE Metal also strong at 8.31%.
And the report links that back to the things we mentioned earlier, foreign money, easing tensions.
Right. Those factors, plus the softer inflation numbers, which always gets people thinking about potential rate cuts down the line, boosts optimism.
Makes sense. Lower inflation, maybe cheaper borrowing costs. Good for business. Were some sectors a bit more, well, subdued?
Yeah, not everything went up quite so dramatically. BSE FMCG, fast-moving consumer goods, that was up a respectable 3.1%. BSE BankX up about 3.05%. And like we saw with the broad indices, the year-to-date picture is really mixed across sectors. For example, IT and realty, despite doing well this week, are actually still negative for the year so far. It just shows how different parts of the economy are reacting.
It's never just one story, is it? Always different currents moving. Okay, let's talk about the actual flow of money. Who is buying? FIIs versus mutual funds.
Right, this is a really interesting comparison. So for the specific week, May 9th to 15th, mutual funds were big net buyers.
Yeah.
Put in 12,438 crore. Significant.
Okay.
Foreign institutional investors, FIIs, they were also net buyers this week, but much less. About ours, 4,453 crore.
So MF's leading the charge recently?
For the week, yes. But zoom out to the year-to-date picture. It flips for FIIs. Mutual funds have been pouring money in all year. A massive R's 155,587 crore net investment. Huge domestic support.
Wow.
FIIs, though. Year-to-date, they pulled out a net R's 88,380 crore. So despite this recent weekly inflow, the longer-term trend this year has been foreign money leaving.
That's a really stark difference. Strong domestic buying kind of counteracting foreign selling over the year. Makes you wonder about that dynamic long-term, doesn't it?
It really does. Is domestic money becoming the dominant force? Something to watch.
Definitely. Okay, let's switch gears. What about the Indian debt market and the rupee? What's the story there?
Well, the debt market seems to be signaling maybe an expectation of lower rates ahead. Things cooled off. We saw call rates drop. Commercial paper rates for 3 months and a year went down. Same for certificate of deposit rates.
Okay.
And probably the key one, the 10-year government security yield, the GSEC yield, it fell from 6.38% down to 6.27%.
Right, and lower yields mean bond prices are generally going up, more demand.
Exactly. And the thinking is, this demand is fueled by, well, lingering geopolitical worries, maybe making bonds look safer, but also those softer inflation numbers we keep mentioning. Both point towards potential RBI rate cuts later.
Which could spur borrowing and investment, but maybe put pressure on the rupee. Always a trade-off.
Precisely. It's a balancing act for the RBI.
And did the government do its usual borrowing?
Yep, the RBI held its weekly auction on May 16th. sold government bonds maturing in 2031 and way out in 2074. Raised the planned RS 25,000 crore. Standard procedure.
Got it. And the rupee itself, how did it fare against other major currencies?
It actually held up pretty well this week. Strengthened against the US dollar, the British pound, and the Japanese yen.
Oh, interesting.
It did slip just a tiny bit against the euro, though, but overall, pretty strong.
And what's behind that strength?
It seems to be a mix of things. Those easing geopolitical concerns, again, the foreign fund inflows into equities we just talked about, even a temporary U.S.-China tariff cut helping sentiment, and maybe the U.S. dollar index itself weakening slightly.
But there were headwinds, too.
Yeah, things like rising crude oil prices tend to work against the rupee, and there's maybe some late-week weakness in stocks. So a bit of a push and pull, but the rupee came out ahead for the week.
Okay, that makes sense. These factors aren't just local, are they? Let's zoom out now. How did the global markets look?
Yeah, let's take that wider view. Globally, it was mostly positive, too, mirroring India in many ways. In the U.S., tech stocks had a great week. The Nasdaq was up a strong 6.6%, Russell 3000. Growth also up over 6%.
So strong performance there. What about Asia and Europe?
Hong Kong's Hang Seng did well, up
Yeah.
over 2%. Europe, UK, France, Germany saw gains, but more moderate. China also saw moderate gains. One point of interest maybe is Japan. The Nikkei was up for the week, but it's still down over 5% for the year. Still struggling a bit in the bigger picture.
Right. So generally positive week globally, but still some underlying issues maybe. What about global bond markets? Did they follow India's lead with falling yields?
Actually, no. That's an interesting contrast. Major global bond yields, US, UK, German, Japanese 10 years, they mostly ticked up during the week.
Huh. So bond prices falling slightly in those markets, different expectations maybe.
Could be different inflation outlooks, growth expectations, central bank signals, lots of factors at play globally.
And commodities, oil, gold.
Oil prices, both NYMEX and Brent crude, edged up slightly, not dramatically, but up. Gold and silver, though, actually fell quite a bit when you measure them in rupees.
And the oil price rise linked to trade hopes.
That seems to be the connection, yes. The temporary U.S.-China tariff cut sparked hopes of easing trade tensions, which could mean better economic activity, therefore more demand for oil. That's the thinking.
Right, that domino effect. So if we try to summarize the drivers for global markets this week, what stands out?
Well, the big theme was definitely those easing worries about a full-blown trade war. That seemed to lift spirits. Then you had specific things like the U.S.-China talks impacting U.S. treasuries, pretty good corporate earnings overall in the U.S., and like in India, softer U.S. inflation data was also a positive.
But it wasn't all smooth sailing. What held markets back in some places?
No, definitely not. You had some weakness in U.S. energy and healthcare stocks, for instance.
Yeah.
European markets were kind of dragged down by some less than stellar corporate earnings reports there. In Asia, maybe some profit-taking after recent gains. And in Japan, a stronger yen hurt their exporter stocks. When Alibaba's earnings in Hong Kong and China came in a bit lower than expected, which didn't help sentiment. So a mix of forces, as always.
Lots of moving parts indeed. Any specific big economic data points from overseas?
Yeah, the main one highlighted was Japan's Q1 GDP number. Their economy actually shrank by a 0.7% annualized. That was a bit of a negative surprise.
Okay, definitely something to note. Right, let's bring it back home now. Domestic macro data and news in India, what did we see?
On the macro front here, mostly good news, especially on inflation. Monthly CPI inflation eased to 3.16% in April, down from 3.34% in March, and wholesale price inflation, WPI, saw a really big drop, down to 0.85% in April from over 2% in March.
That's quite a slowdown in WPI, both helping that rate cut narrative we discussed.
Absolutely. And industrial production, the IIP data for March showed a slight pickup too, up to 3.0% growth from 2.7% in February. So positive signs there.
Good. What about trade?
Less positive there, unfortunately. The trade deficit widened in April, hit $26.42 billion.
Wider than March.
Yeah, up from about $21.5 billion. It was mostly because imports increased while exports actually dipped a bit. So that gap grew. Something to keep an eye on.
Right. And we also got some new job numbers.
We did. The first results from the new monthly labor force survey came out, showed a national unemployment rate of 5.1% for April. The rate was higher in urban areas, though 6.5%. Having this monthly data now will be really helpful for tracking employment trends.
Definitely. Any forecasts or comments from industry groups?
Yes, the Confederation of Indian Industries, CII, they projected GDP growth of 6.5% for this fiscal year. And their president sounded pretty confident about the economy's resilience, its ability to handle, the current geopolitical uncertainty. That's usually seen as a positive signal.
Good to hear that confidence. Okay, policy and regulations. Any key moves?
Quite a few things, actually. The finance ministry put out a draft for a climate finance taxonomy, basically a framework to help classify green investments.
Yeah.
They also told banks to get tougher on recovering bad loans.
Okay.
The RBI made it mandatory to report all digital lending apps through their CIMS portal. Transparency push, I suppose. And they also eased rules for foreign portfolio investors, FPIs, wanting to invest in Indian corporate bonds. Interesting timing, given the narrow rate gap with the U.S. right now.
Right, trying to attract that capital, maybe. Anything from SEBI?
Yeah, SEBI proposed tweaking the corporate governance disclosure rules for companies that have a lot of listed debt, just refining the framework there.
Okay, busy week on the regulatory front, too. Let's quickly round up the international macro news.
Sure. So besides the U.S. inflation easing, which we covered,
Mhm.
Eurozone Q1 growth was steady at 1.2%, same as the previous quarter. The U.K.'s Q1 growth slowed down a touch, 1.1% compared to 1.4% before. Japan's producer prices eased slightly, but as we said, their overall economy contracted. And China's annual inflation stayed very low and stable. So kind of a mixed economic picture globally.
Okay, great. So as we wrap up this deep dive, what are the main things you think our listeners should take away from this week?
Well, I think the key points are a pretty positive week for Indian stocks, really driven by that mix of returning foreign interest, calmer geopolitics, and especially the easing inflation. But it's crucial to remember that contrast the big weekly gains in small and mid caps versus their negative year-to-date performance. That's a bit of a puzzle.
Yeah.
The debt market here seems to be anticipating lower rates. The rupee showed some decent strength. And globally, markets were generally up, mostly on trade optimism, though there were regional differences.
And that easing inflation theme, both here and in the U.S., seems really central right now.
Absolutely. It's driving a lot of the conversation about where central banks might go next with interest rates.
Definitely. So here's a final thought for you to consider as we finish up. Given that divergence, we saw small and mid caps rocketing this week but still down for the year versus the steadier lead indices. And considering FIIs are net sellers year to date despite this week's buying, what could that mean long term for different parts of the Indian market? How might global trade shifts and India's own policies continue to shape these different paths? Something to chew on. Thanks for joining us for this week's deep dive.